Don't worry about a thing because a woman is in charge of the Treasury. Diversity to the rescue again. And this woman, Janet Yellen, just so happens to have been paid almost $1 million by the firm that bailed out the hedge fund that is directly in the center of this whole debacle.
Ladies and gentlemen, Ron Kruszewski, let's just call him. Hey, Ronnie K, CEO of Stifel Financial. Now, we know the name of the financial investment bank is Stifel, right? But isn't it interesting, Stifel? Because that's what the mainstream Wall Street, corporatist, investment banking, hedge fund owners, elitists have been doing to retail investors since the beginning of time. The advent of these recent apps, Robinhood, E-Trade, etc., and the advent of individual control over investments has completely upturned the financial investment world. As happens so often in human history, the technology has outran the regulation. The technology has outran many of the people who are in this field of vision. Often when systems are disrupted, they are disrupted by people who had not previously been inside of the system. They were incapable of seeing the changes happening inside the system they were operating in. The GameStop gate, Reddit gate, Robinhood gate, whatever you want to call it. It's a bellwether. There's no going back after what happened over the past week. These investment bankers, they're inside the system, and so still they are incapable of seeing that the system is changing dramatically. And what kind of system are they inside of? Well, they're inside of a system where only they had the power to sway the price of stocks in one direction or the other. Up until this point, the job of the retail investor who wanted to trade in day trading or penny stocks or pump and dumps, they had to try and anticipate the moves that the institutional investors were making, the whales. The best a retail investor could do was to hope to see the moves that the big money was making and somehow grab a hold of their coattails in time to make a small profit themselves. Now, investment bankers and people inside of the financial system, they were perfectly happy to have retail investors have access to the system. After all, without the retail investors, whose money would they be stealing? You see, the stock market is a casino, and the whales are the house. And the SEC is the security guard that works for the casino. You're not going to hear many people on Wall Street admit those things. But in their hubris and in their confusion, in their inability to adapt to asymmetric financial warfare, being back on their heels, they are admitting these things. Let's listen to Ron, CEO of Stifel Foundation, Investment Banking Strategies, who got wrecked over this whole situation. Wrecked. R-E-K-T. Wrecked.
Investment banking revenues up 18%, almost every division posting better than expected results. Everybody seems to love the quarter. The stock is down though, Ron. What are you just getting caught up in all the market contagion today?
Yeah, I think so. I mean, we had a great quarter. Importantly, our outlook for 2021 is every bit as optimistic. So, look at the markets. They're going to do what the markets are going to do.
The outlook for 2021, the paradigm has shifted. See, he's saying, the projections that we've been making over the past 6 months are right in line with what we think is going to happen. Because he doesn't understand the paradigm has changed. And I'm going to explain to you what exactly has changed as we go through this.
I'm very pleased with our results. You said it, 25 consecutive years of record revenue. Not very many investment banks can say that. And we just had a great quarter, records across the board. So great and optimistic.
So he's citing their quarterly records and he's showing, oh, look at how financially sound we are as an investment firm. Look at our fundamentals. Look at how strong our business model is. Because after all, smart money does their research, right? And finds out, is this a business worth investing? Is it something that's going to grow in the long term? Except Redditors have been getting on Reddit and collectivizing and choosing to inflate the price of certain stocks based off of communal decision making. Doesn't that throw your entire model out the window, sir? I don't care if your investment bank is financially sound over the long term. If me and 10 million of my brothers and sisters will all get together and buy the shares of stocks that we like and of which we wish, your fundamentals be damned. You're talking about last year.
Talk to us. You have a retail brokerage. So talk to us about what you are and your team is seeing, Ron. Is this sort of Reddit rebellion or whatever you want to call it this week?
The RedditRebellion. Boys, I gotta tell you, it came out of CNBC, but I like it. The RedditRebellion. Which one would this be? 4 or 5? The RedditRebellion 5? I don't know.
It's really centered around 20 stocks. GameStop getting the most attention, but it's a small number of stocks, generally with low float, high short interest. Are you seeing any knock-on effects to other equities because of this?
I think that, sure. I mean, there's a lot of interest by investors and so-called retail investors. But I think this thing that's going on, the real question is, what are we telling our clients? And there's a lot of, as if this is a new phenomenon. Short squeezes have been going on for over 100 years. It happened in railroads.
Oh, okay. There's a lot of hubbub saying that this is something new. Short sales have been going on since the railroad. Okay, see, this is something new. Short sales have been going on since the railroad, yeah. As a matter of fact, in my episode last night, I said you guys have been doing this for over 100 years. And this is funny, but listen to his terminology.
It happened in railroads. And what I find, what people aren't talking about is that, when this happens, the stock will go to a level, in this case, GameStop, $300 to $400. That's not sustainable. That is the clearing mechanism for shorts to get out. And once that's done, this stock will revert back to where it was. And so we're talking about how much the hedge funds are losing, and they're losing a lot. But there are a lot of longs that are going to lose a lot of money when this trade unwinds. And I think that that's where I'm a little concerned that people do not understand the risk of playing in what is effectively a casino.
So there's a lot to unpack there. First of all, the stock market is a casino? Well, does that make you, sir, the house? So are you telling me the house is angry about the current condition of the Wall Street casino? Are you telling me that all my boomer parents and friends and uncles and aunts that I know, you're gambling with their money? I thought the whole thing about the stock market was it was different than gambling, right? Well, now it's essentially gambling. Why? Because the people are doing it, not the institutional investors. He mentions in passing that hedge funds are losing money. Hedge funds are being decimated by this. And every liquidated short that gets hammered in these brokerage firms goes into the account of a retail Robinhood investor, a guy sitting at his house trying to make some side money for his mom and his dad, a kid sitting at his house who's just in college and trying to learn how to invest 20 or 30 bucks. So we're draining these giant hedge funds, and this money's being distributed into the everyday man's Robinhood account. And yet now, he's willing to admit the stock market is a casino. You're damn right it is. And up until now, it's been a rigged casino for the House. And you've been the House. And you, sir, are only mad that you're no longer the House.
Well, I mean, Ron, how do you know that a financially distressed, mall-based, brick-and-mortar video game company that is widely hated by every analyst on the street isn't worth $21 billion?
Okay, I will say that, as Warren Buffett said at one time, the stock market is a voting machine for a long time. And so the votes are coming in, but eventually it turns into a weighing machine. And unless they completely change their model or do something, that stock...
That's exactly what's going to happen, is there's going to be a complete change of the model. Again, these two men are talking inside of the old paradigm. The old paradigm where the stock of the company is a reflection of how well the company's doing. Do you think Apple and Tesla are legitimately worth where they're at right now? Hell no, they're not. Those stocks are highly overinflated, along with every other stock in the damn stock market. But now, it's a problem that GameStop's overvalued. Why? Because GameStop was overvalued by the everyday man, and they hurt the institutions. And so now all the things that the institutions have been doing for a century to leverage the House against the everyday man, they are now admitting to every bit of it. If the Redditors are manipulating the markets, then what the hell have they been doing for years? On top of that, the fact that these guys are stuck thinking in the old paradigm, they're thinking in the terms of what a typical pump and dump does. A pump and dump is where a stock is all of a sudden blasted to a higher price because institutional investors, the big guys at the top, want to basically screw over the retail investor. So this is how it goes. They buy a bunch of the stock at the cheapest amount possible, and then they get on CNBC and Fox News and every other opportunity that they have, and they talk about how this certain stock that they bought so cheap is about to have an explosive pump to the top. And as the stock rises a little bit, people start to see that it's rising. Oh my gosh. And so then more and more people buy in, and they make bad decisions buying in at 3 or 4 times the price of the stock normally is. And then as soon as the stock gets all the way up to the top where that guy who's been promoting it and who bought it so cheap wants to cash out, he cashes out. And he screws all those people that what they call FOMO'd into the buy, or fear of missing out. They saw that big green line going up and they wanted in. The reason why this always screws the retail investor is because the retail investor buys on the way up because they didn't know what the institutional investor's plan was. And so what this man's saying is, what goes up must come down. And yes, I'm afraid there's going to be a lot of people who are taking long positions on GameStop at its peak, and they are going to really be hurt on the way down. But what they're not even thinking about is these people on Reddit have decided to put their money in this stock regardless. If it comes out that the business is not worth anything, it doesn't matter. This is where the people have decided to put their money. And so this expectant crash that they have, this expectation of a flash crash, well, what if the people on Reddit started telling everyone to slowly back out of the trades? What if communication among the retail traders prevented that horrible flash crash that happened when the institutional investors were pumping and dumping? We all understand that stocks have to correct and have to come back down, but in the same way that they created the pump on Reddit, they could also not create the dump on Reddit. And I think that's what the institutional investors are truly terrified of, is that the people see outside of this, quote, pump and dump mentality. We can communicate on the way down just as much as we communicated on the way up. public conversation among the public about information they're allowed to talk about. This is not insider trading. This is not, frankly, the illegal pumping and dumping that the institutions have been doing for a century. No. What this is it's a form of collectivization. It is a form of unionization. It is an advent of the internet and the decentralization of the world. But now that the people are able to compete in the space, the people are also allowed to collectively make decisions about who and what they want to invest their money in. And you know what? The big Wall Street whales be damned. They don't even understand the new paradigm. It's over, and they don't even know it.
It's not worth $21 billion. I pretty well confidently can say that. Now, maybe they bought some land and there's some huge, well, I can't say oil reserves because it may not be worth anything, but they're sitting on some gold mine, and so the value will be there. But I don't think there's anyone that believes that this company is worth $21 to $25 billion. It is a phenomenon of a short squeeze, and there are people coming into this game that have no idea the risks that they're taking, and there is going to be that, and that speaks nothing about what's going on in the options market. I mean, I think there's 9 million shares that settled today in the options market on calls that people have paid, and there's big premiums being paid. All I'm saying to you, Brian, is that when the book is written on this trade, it isn't going to be just the shorts that got hammered. There are going to be a lot of longs that are going to lose a lot of money.
Yeah.
If this was your everyday pump and dump, and if there hadn't been any interference by the government, the Wall Street whales, the SEC, and Robinhood, the app itself, then the people on Reddit had a chance to get together and actually not do the dump part of pump and dump. If we all communicate as a people, then we can all stop this assumption that we must attempt to figure out what the institutions are doing and try to grab onto their coattails early enough and jump off soon enough to where we make a fraction of the money that they're making by doing exactly what they're calling illegal right now. When hundreds of thousands of citizens get together and talk about collectivization of their investments, that they're trying to say should be illegal. But when 3 men get together smoking cigars and adjust the entire GDP of the American government, that's perfectly fine. What we're seeing here is a move in populism. Don't dare let this go by you without realizing that this is another populist uprising. And importantly, it's another populist uprising coming out of Reddit and 4chan. It shows you, and it must impart on you, how important platforms that allow true and honest and free speech are. Because these ideas, they come out of those platforms. Are there dark, horrible places in those platforms? Yes, but that kind of shit is necessary. There must be a yin and a yang.
Yeah.
One of the things that we're talking about is maybe misinformation and pump and dumps, and it's occurring on social media again. It just, I'm wondering whether it's part of...
And it's occurring on social media again. So what he's saying there is another problem from these people, and it's come from this thing, social media again.
Part of the same problem, the type of regulation that we finally need to consider. And like I said, we should always have a light touch with regulation, but you're seeing the way things can get started. Again, this is different. Maybe it's Reddit, maybe it's not Facebook.
Maybe it's Reddit, maybe it's not Facebook.
But you're seeing the same situation. At this point, it's not about an election. It's not about an insurrection, but
at this point, it's not about an election. So who had a problem with the election? It's not about an insurrection. Who exactly was accused of an insurrection?
There are interesting things happening that seem to be spawned to some extent, or at least blown out of proportion by social media.
Oh, it seems like there's some things that have something in common here that seem to be blowing out of proportion by social media. Why don't you just come out and say it? You know what he wants to say is right-wing extremists that attempted to overthrow the Capitol building and lied about voter fraud and have the audacity to still back Donald Trump. They've now all gotten together on Reddit to cause mayhem in the financial markets. That's what he wants to say.
Yeah, Adina.
Well, I do think, though, that as we look at these new technologies that are there available to everyone, including investors, I think it's also important for regulators to understand that, manipulation is manipulation, whether it's happening through a new technology medium or it's happening through traditional mail.
Oh, now it's a problem. This manipulation being done by the Wall Street whales and in coordination with the SEC and every other governmental agency that's supposed to be overwatching them has been done for 100 years. But now that it's being done by citizens, by retail investors, it's a problem. I'm telling you, Bernie bros, I'm telling you, MAGA, it is time for us to get together. The common thread here is populism, the people. That is what they have a problem with. That is what the ruling class is terrified of. And this Reddit situation, this Robinhood situation, GameStop Gate, it's just the latest example. You guys, at some point we have to realize that there is a populist movement on each side of the parties, and they need to come together, at least for the time being.
So I think it's just a matter of making sure that we understand what the behavior is, what's underpinning the behavior, and working appropriately with the regulators to manage the situation.
All of that dog whistling that I've played for you in these past two media interviews is something I would like to point out to people before we get off of here. They're alluding to and dog whistling at MAGA, but that's not going to be the case for long. Soon it's going to be coming for anybody who has an alternative opinion than the mainstream narrative. I'm telling you guys this as a warning. You may not see that it affects you personally right now, but it will affect you personally soon. And then you will have wished that you had done something earlier when you start to think of the voices who have been silenced and you've said nothing. We should be allowed to collectivize around our investments. If American citizens are allowed to form unions so that they could collectively bargain for better working conditions, we should be able to form unions to better be able to compete with the Wall Street tycoons by pooling our money together. There's nothing illegal about us doing that, and yet we were shut down from doing it yesterday. This is because it wasn't about, it wasn't even about the billions of dollars that they were shorted out. It was about exposing the financial system as a fraud. And it is a fraud. We need a new financial system. This one, frankly, is a corpse. It died in 2008. Like, share, sub the channel, guys. I love you. I got a lot more content coming. All the ways to leave me a tip, if you would like to do so, are in the pinned comment below.